Is the FDIC about to insure Bitcoin assets with banks? Well, there is breaking news that could blow your mind. I'm talking about potentially one of the biggest changes that we've seen to the banking industry, especially in regards to Bitcoin, that we have ever seen, maybe ever. Now, I want to show you what's going on exactly, what the FDIC said, but more importantly, I want to back up just a little bit to earlier this year to show you what groundwork has already been laid, what changes have already happened to Bitcoin, what the plans were, what's already happened, and now what the FDIC is going to do, because things are about to blow up. We could see Bitcoin go to adoption levels that people might not have ever even imagined. And this is your opportunity to get in front of this information, to front run this information. So I'm going to break down, like I said, what the plans were laid out earlier this year, what has already transpired so far this year, and of course now what the FDIC is saying. That is literally going to change everything. So let's go ahead and jump right in. All right, now welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money, because almost everything that you've learned is wrong, and a lot of times what you hear and read is even wrong. Or sometimes you maybe just don't have the full context to put it all together. Now, I'm talking about the largest asymmetric opportunity that we've ever seen, multiple generations will have ever seen. An asymmetric opportunity is something that gives us more upside than downside, more return than there is risk that we assign to it. And the way to take advantage of these asymmetric opportunities is to have asymmetric information. That means you got to know something that most people don't have or most people don't understand. So let me show you what this information is. By the time I finish, you are going to be ready to go take advantage of this opportunity. So before I show you exactly what's transpired, let's just go back a little bit in time, not super far like I normally do with history. We're going to go back just to May of this year. So jumping right in, you can see here on my screen, on CNBC, this was May 5th of this year, that Bitcoin is coming to hundreds of banks this year, says crypto custody firm NYDIG. Now, hundreds of banks, maybe it doesn't sound that big, but let's jump in a little bit. It says here, for the first time, customers of some U.S. banks will soon be able to buy, hold, and sell Bitcoin through their existing accounts. Now, right now, if you want to buy Bitcoin, you have to pull money out of your bank and then go to a crypto exchange like Coinbase or Kraken or Gemini or Swan, something like that. You can connect your banks, but people are still very skeptical of that, right? It's hard, it's clunky, it's confusing. Sometimes there's this barrier. People are afraid to connect their bank to a platform like Coinbase. Maybe it could get hacked and all these things. And so there's this friction that's caused this, a lot of the people not to take advantage of this. But if customers of the U.S. banks could be able to buy Bitcoin directly through their accounts, imagine how much that would change things. Let's go in and take a little bit further. Banks are asking for Bitcoin because they can see their customers sending dollars to Coinbase and other crypto exchanges. So basically, the banks see that everybody's pulling their money out of the banks. Of course, why would you want to leave your money in the bank that's not making any money? And they're taking that money and going into exchanges like Coinbase. And so the banks are like, shoot, if we don't offer these services like Coinbase, Kraken, Gemini, then we are going to lose all of our relationships. Now, the thing you have to understand with banking is that banking is very sticky. What does that mean? Well, that means that once you sign up with a banking system, a banking institution, the chance of you leaving that is very difficult because it's kind of difficult to leave. I signed up with Wells Fargo when it was like the first bank account I've ever had, and I'm still with them today. I don't like them. They've been accused of massive fraud. They've paid out the largest penalties for fraud, but I stay with them because they're sticky and really is not the better options to go to. But if I were to pull my money out and go to Kraken, Gemini, etc., then I might be stuck over there and I might not come over to the bank. So banks understand that and they want to keep their customers there. What happened is we saw that after rolling out an initial Bitcoin product, NYDIG plans on other services, including debit cards, rewards paid in Bitcoin, and a new type of bank account that is FDIC insured. What? A bank product that's FDIC insured, but pays interest in Bitcoin. So this was back in May. All right, so these are big plans. A lot of people said, oh, that's never going to happen, blah, blah, blah. I want to roll down a little bit, and then we'll show you how this has progressed. We can see here hundreds of banks are already enrolled in this program. Now, hundreds of banks that service like over 300 million checking accounts, 300 million. Now, right now, there's approximately 40 to 50 million people that own Bitcoin in America, in the United States. So what happens when you go from 50 to 300 million? That's a big difference. you can imagine what would happen with the price. Obviously, supply demand. Let's keep going. What we're doing is making it simple for everyday Americans and corporations to be able to buy Bitcoin through their existing bank relationships. So like I said, a lot of times people still think it's a trend, it's a scam, it's a fraud, it's a Ponzi, it's too difficult, it's too many risks, all these things. But they have this trust with the bank, which they shouldn't because the banks haven't earned your trust, but they do. And so if I could just click a button, in my mind, it shifts that. It makes it seem more legitimate. Let's keep going. Banks are now asking for Bitcoin because they can see their customers sending dollars to Coinbase, as I said. Now, this is just for banks, for you and I, retail people to do that. We can see that in March, Morgan Stanley, one of the large financial institutions in the United States, was among first banks to offer Bitcoin funds to its clients. We also saw Goldman Sachs, which is the leader in banking in the United States, quickly followed with an announcement of its own, and JP Morgan is reportedly looking at its own product in conjunction with NYDIG. We can see that with Bitcoin available through your bank to be purchased with as little as $1. So that's pretty cool. So most people think that Bitcoin's $60-some thousand right now. I don't have $60,000. I can't buy a Bitcoin. And so they go to buy Shibu coin or whatever coin is cheap. Well, they didn't know that you could probably buy $1 worth of Bitcoin. And so now in your bank account, you could literally click a button and buy $1 worth of Bitcoin, which would be big. And they said that we think this was huge for economic empowerment. And like I said, here, vendor to banks with nearly 300 million checking accounts. So that's how it started back in May. Now, that's a pretty ambitious goal, get 300 million checking accounts into buying Bitcoin by the end of the year. That's what they had quoted. A lot of people thought they couldn't do that. So let's see how this has progressed. Let's skip ahead here. This came out October 5th. So this was just a few weeks ago. U.S. Bank launches Bitcoin service as institutions race to cater to crypto demand. So the U.S. Bank is the 5th biggest retail bank in the nation. So this is not a small bank. The 5th biggest in the entire United States announced that they're going to start offering Bitcoin services, help investment managers store private keys for Bitcoin, Bitcoin Cash, and Litecoin with the help of sub-custodian NYDIG. So they announced it in May. A lot of people thought it was too ambitious. It wouldn't happen. But here we are just a few weeks ago, October 5th, and the U.S. Bank, the 5th largest bank, announced it. That's how it progressed. We can see here our clients are getting very serious about the potential of cryptocurrency as a diversified asset class, said the bank. Meaning people see this is happening, see this is not going away. People want to take advantage of it. And if the banks don't offer it, then they're going to go somewhere else. And so the banks want to offer that. U.S. Bank is founded during the Civil War in 1863. And so you get that. Now, this is on U.S. Bank's own website here. You can see that it launched it here again October 5th. Now, how is it going? Let's see what just happened. So yesterday, one day ago, U.S. regulators exploring how banks could hold crypto assets, says the FDIC. So what's the FDIC? That's the Federal Deposit Insurance, right? So they insure your deposits. So if a bank were to disappear, go under, go bankrupt, etc., they would insure the money you have in the bank up to certain levels, depending on the status of your company and person, et cetera. And so basically, if you had $100,000 in the bank, they disappeared, you get insurance on that $100,000. The problem with crypto, problem with Bitcoin is that if it gets hacked or gets stolen or the exchange goes under, you could lose all that money. People are afraid of that, and rightfully so, right? It happens. But what if it was being able to be, I could buy Bitcoin directly in my checking account, and it was FDIC insured? How would that change things? Now, remember, back here in May, NYDIG said they wanted people to be able to have Bitcoin reward points paid in Bitcoin from the banks and have FDIC insured deposits. And here we are a day ago, the FDIC chairman is saying we're exploring on how banks could do that. U.S. officials are looking to provide a clear path for banks and their clients that are looking to hold cryptocurrencies and want to offer deposit insurance on those. Federal Deposit Insurance Corporation told Reuters in an interview on Monday that the team of U.S. bank regulators is trying to provide a roadmap for banks to engage with their crypto assets. How can we insure our customers' deposits? Now, let me tell you, when it comes to new technologies, new things like Bitcoin, new technology, there's something called the innovation diffusion. And so you've probably seen this chart that I have up on the screen before. It's like an upside down bell curve. And what happens is you have the innovators. That's this little blue line area right here. That's usually about 8 to 10% of adoption. So 8 to 10% of the entire population, the people are using it. And that's just the innovators, the people that kind of designed it. Then you have this kind of this red part right here, which is then the true believers, the early adopters, the true believers. And that gets us to about 15 to 18% of adoption. And then you have this gap right here. And this gap is called the chasm. Now, the chasm is the gap where you have to go from the true believers to the early adopters. And the reason why there's a gap is there's a mental shift that has to happen. The true believers, the visionaries, they're visionaries. They can see the future. They have that vision that most people just don't have. So people that have been telling you to buy Bitcoin, like me, for what now, 6 or 7 years now, I had this vision that it could work. A lot of people have been skeptical of that. And that's okay, rightfully so. Because they're early adopters or even early majority, late majority, they're skeptical of that. And so we have to change their perception. That's the chasm. And so something has to shift in order to get that chasm to be crossed in the mental model. So what I believe is that most people think, one, banks or governments are going to make it illegal. 2, it's too difficult. 3, it's too risky. Right? 4, it's never going to work. And so that's the mental block that's holding most people back. But what if in my Wells Fargo, Bank of America, JP Morgan Chase account, I could literally just go, add $1 to Bitcoin or $5 or $100 or whatever that amount is, right in my bank account. They can store it for me. Well, that makes me think it's legitimate. Right? If my bank offers it, it must be legitimate. It makes it easy because I can just click a button in my online checking account and transfer money. It makes it safe because it's insured. My bank has it, and it's insured. And I think most of all, it shows that the governments are not going to ban it. If you're still thinking the government's going to ban it, you're going to buy at the laggards at the last stage of this. We just had the ETF approved. As I already mentioned, Goldman Sachs, all the big banks are in it. At this point, there's pretty much no way the governments are going to ban it. We have an ETF approved, right? The banks are now offering it. It's not going to happen. And so I think that this shift, this chasm is about to be crossed, and we are about to see an explosion in Bitcoin. And we would go into this early adopters and then the early majorities, and we'll peak out. I think we'll hit that point probably by the end of 2029. There's something else called don't show this part, Dejan. There's something else that we can use to measure the growth or the adoption of new technologies like Bitcoin, cryptocurrencies, and that's this S-curve right here. And what this means is that typically the time that it takes a new technology like the phone or the internet or TVs, to go from 0 to 10% adoption, that's this flat part of the S right here, the time it takes to go from 0 to 10% adoption is the same time it takes to go from 10 to 90% adoption. That's what S-curves tell us. And this is very reliable. It's used to track all types of diffusion of things. And Bitcoin reached 10% adoption by 2019, in about 10 years. So that means, using S-curve technology or scale, we would know then that Bitcoin should reach 90% adoption by 2029, which is 8 years from now. And so I believe, going back to this, we'll be at this kind of peak here by 2028, or 2029, I'm sorry, 8 years from now, we'll be at about 90% adoption. And so literally we'll go into this parabolic phase and it goes straight up. Now, again, most people don't have this information. This just came out yesterday. Once the FDIC lights this up, as a few more banks start enabling this in checking accounts, the adoption could go through the roof. And you heard it here first. This is your chance to front run this surge into the Bitcoin market being made by the FTC, making it more legit, making it easier, and insuring your assets. So that's the information. That's the asymmetric information you need to take advantage of the asymmetric opportunity. You heard it here first on the Mark Moss channel. Do you like that? Give me some thumbs up if you do. If you don't, give me thumbs down. That's okay, but at least tell me why down below, what's wrong with it. And of course, as always, leave me a comment. Let me know. Do you think this is about to change the perception, to cross the chasm? Yes or no? Are we going to cross the chasm with the ETF and the FDIC coming on board? Yes or no? Leave me a comment. That's what I got for you today. To your success. I'm out.